The way that our network has been designed is that we always say that you can take a sledgehammer to one side of our network and the other side will live on. So you're always going to receive one copy of market data or the ability to trade. Clients' trading strategies are critical to ensuring that they have uptime. That's the most important factor, even beyond latency. What we've done is we've designed a fully diverse network. We've been able to integrate that with our managed services solutions with 24/7/365 support. And that's allowed us to generate the resilience necessary for them to have successful trading strategies.
How is TNS scaling its infrastructure to meet rising equity trading volumes?
We're always trying to scale with the growth of these markets, especially on the U.S. equity options side. The derivatives markets has grown significantly over the past years, and our network has been developed to be agile in order to adapt to that growth. One of the most important things that we've done is we've created a dark fiber network that can scale and grow with the volume. Ultimately, that means that we provide clients lossless data, which helps them execute their trading strategies.
How does TNS differentiate its trading infrastructure services from competitors?
The major differentiating factors for our offering is what we've been doing on our market data services side. And that means that we've been managing software instances for clients like Kafka, Solace, and Trep. That alone is a 24/7/365 job. And our team has been able to generate a support model where we can support those applications for our clients, and then they can focus on executing their algos and their trading strategy. We've basically cleared the way for clients to focus on what they want and then just leave the support element to us.
What are TNS's strategies for enhancing operational resilience?
Made a significant acquisition in Radiance. I think that scale is going to be significant for us next year in Q1 once we're able to close. What's interesting about the market right now and the regulatory framework is we're always the ones to keep pace with that. We're always the one they need to ensure where our network is in compliance, that we have PCI compliance, that we're able to provide that support to our clients. And ultimately, we need to be able to keep up with those demands of what they have. Honestly, it's our job to make sure our clients have a managed service that they feel supported by.
Have outages like those at AWS affected how clients feel about the cloud?
There's been a significant amount of cloud adoption over the past years for clients to move things to the cloud, and we've seen these outages for the cloud for AWS happen over time. And we've had more demand for clients to bring things on-prem so that they have more control of their own environments, which gives them obviously more flexibility with them running their trading strategies in these data centers. But it also means that they don't have to pay in order to pull things out of the cloud, which I think is significant. I guess a prediction that I would see in our space is that maybe things start really trending away from the cloud back to what I would consider, the significant data center investment we've seen with AI. I think that it could be the same thing for financial markets. Clients will invest in data centers in proximity locations where they can run their strategies.